good morning and welcome to the Thursday edition of Business Morning. Well, a better part of the week is gone and I hope you have not missed even one episode of Business Morning. If you did then, well, you've missed a lot of relevant conversations, but you can still make up for it today. So you're welcome to this 55 minutes of relevance and current talk. Business talk, that is. I'm Ini John Mekwa. Let's start off in the oil space where prices dropped more than 1% today in a volatile week as economic concerns and recession fears dogged global financial markets, outweighing supply concerns and geopolitical tensions in Europe. Brent crude futures slipped $1.25 to $106.26 a barrel. Yesterday, this was $105. While WTI crude futures fell by $1.24 to land at $104.47 a barrel. Oil prices are under pressure this week, along with global financial markets on jitters over rising interest rates, the strongest U.S. dollar in 2 decades, concerns over inflation and possible recession, prolonged COVID-19 lockdown in the world's top crude importer, China, have also impacted the market. However, supply concerns stemming from Russia's invasion of Ukraine have bolstered the market, with prices rising over 35% so far this year. A pending European Union ban on oil from Russia, a key EU supplier of crude and fuels that could further tighten global supplies, is also a factor driving prices. Well, in Nigeria, the gross domestic GDP, that's the gross domestic product, improved further in the third and the fourth quarters of last year. That's according to the National Bureau of Statistics. It is important to note that Nigerians are awaiting the reports for the first quarter of 2022, seeing that the first quarter has ended since March. Well, the NBS shows that the country's GDP rose by 4.03% in the third quarter and 3.98% year-on-year the final 3 months. Before now, Nigeria's GDP recorded a negative annual growth rate of minus 1.92% from 2020 compared to 2.27% in 2019. However, the country came out of recession after positive growth rates were recorded in the fourth quarter of 2020. We have findings from Afrinvest on consumer goods sector. And those prices you're experiencing, prices of food, crops and commodities, there will be a major conversation, but that will be after the break here on Business Morning. You're welcome. I'm Ini John Mekwa. Welcome back. Well, in 2021, the Nigerian economy bounced back from the pandemic-induced recession with a 3.4% GDP growth following the full reopening of the economy. This was further supported with the injection of stimulus packages. We heard a lot about that by the federal government and the Central Bank of Nigeria. Consequently, household final consumption expenditure rose 45.8% year-on-year. And in the first half of the year 2021, it offset the 11.6% contraction in the prior year. However, the negative impact of COVID-19 on global supply chain persisted, resulting in elevated volatility of commodities prices. All this have been captured in Afrinvest Consumer Goods Sector Report. And we have Dr. Mobola Adu, investment research analyst with Afrinvest now, to give us more about that report. Good morning, Dr. Adu. Thank you so much for joining us.
Thank you for joining me. Thank you for me.
Great. So what are some of the high points of this report by Afrinvest?
Yes, so just right, you rightly mentioned, right, the economy bounced back from a pandemic-induced recession. And the theme of our report was actually sailing in turbulent headwinds, which represents what the industry has been faced with over the past year and even this year also. So for a start, right, the business environment was very tough. We have sector players that import major inputs from abroad in terms of raw materials. Average raw material prices, according to FAO and IMF, rose by over 20-30% last year, which compounded the woes for the consumer goods industry in terms of their cost to sales. If you look at the sugar industry, for example, right, on the average, around 80% of raw materials are imported from abroad, which definitely translates into increased cost of sales and affecting their profit margins. If you also look at it in terms of what is even happening in Russia and Ukraine now, in terms of how the tensions have affected wheat prices, which is also an important raw material for the flour milling industry. So by and large, the report just reflects some of these challenges that these industry players are being plagued by. Even if you look at it, if we bring it back home domestically, we have issues around supply chain dynamics in terms of port congestions. It's in Apapa that is affecting their distribution network. We had some of the industry players that had to reduce their depot centers from around 27 to about 6 in order to help to maintain a bit of business efficiency. If you also look at it in terms of inflation rates, just like you rightly mentioned, inflation as at March rose to around 15.9%. At the end of last year, we had roughly around 15% inflation, and basically that translates to reduced, increased pressure on consumers' wallets, and by implication, it tends to reduce their discretionary spending, which is the bulk of what the consumer goods industries, what they produce, right? So you are having a situation where prices of goods are rising, costs of productions are rising, but you're having a situation where industry players cannot easily adjust their prices in light of these challenges that are happening in the economy, because you have a situation where you have cheaper brands or even unlisted brands that are offering consumers a decent price on some of these products that they also produce. So at the end of the day, we're seeing industry players have to re-strategize in bringing out smaller packages or smaller sizes for their products in order to still maintain a bit of market share. So just like I mentioned at the beginning, the report reflects a lot of the challenges that the industry players have been going through within the last year and also this year, considering a lot of the tensions we are having in the global environment.
Yeah, so interestingly, I mean, the flour mill industry is one very interesting industry at this time, especially when you connect it to what's going on in Ukraine. We've been talking a lot about wheat. And even before the war, anyway, I think we had challenges with the supply of corn. You know, these are major raw materials. Tell us about your findings when it comes to the supply of raw materials, especially, let's focus on the grains. What are the challenges? Why can't we produce these raw materials back here?
Yeah, so that's an interesting point to mention, right? So before this year started, even basically around last year, you're having a situation where the terrain isn't that good. You look at some of these wheat producers, because they are global brands, right? They try to source for the best raw materials in order to deliver quality products. So if you're having a situation where you feel that, the best you're going to get is from abroad, then that tends to limit the way in which you can source these raw materials. Locally, you are having a situation where you're also battling with the headers crisis that are affecting farmers. So in other words, they are left in a situation where they have to import a large bulk of their raw materials from abroad, right? And then you have to deal with the issues of rising commodity prices and also FX challenges. So because of FX challenges, what you're basically purchasing last year compared to a few years ago, even though it's around the same quantity, but you're paying double because the exchange rate has moved against you. So basically for the wheat millers and for this industry, right, you have a situation where you have to deliver quality to the consumers You don't want to have a situation where people are returning your products or you are getting a bad image. So in order to maintain that, you have to source majority of your raw materials from abroad, which you believe would help to deliver quality products.
So what's your outlook for this industry, looking at the fact that the war is still there, the supply constraint is still there, the production constraint is still there, the FX constraint is also still there. What's your outlook for the rest of the year for this the flour mill industry?
Yeah, so our outlook for the year, in terms of revenue, we expect revenue to remain steady, but their major challenge, like I said, is in terms of their cost of production. We expect them to leverage on the amount of inventory they still have, but that will only take you for a little while, and then you still have to bring in more raw materials to produce. Interestingly, as at Q1 this year, NASCON posted their revenue grew roughly around 20%, but interestingly, their cost of sales rose around 60%. That led to their profit margins for the first quarter declining to around 8.7% compared to the previous quarter when they did around 13% thereabout. So we are having a situation where you still have to meet your demand levels, but because of what is happening in the global environment, cost pressures are mounting, which means that at the end of the day, there's little that is going to go towards the bottom line. So for this year, we expect, like I said earlier, we expect prices for these agricultural commodities to remain elevated. The resulting effect of that is that the profit margins of the millers or the flour milling industry are going to be under intense pressure. It's going to be a situation where you still have to import these raw materials. Your inventory, like I said, would only last you for a little while before you need to go and import more. So at the end of the day, industry margins are going to be really under threat for the flour milling industry this year.
Yeah, and then on the consumer side, what have you observed about price sensitivity and demand?
Yeah, so on the consumer side, like I said earlier, the consumer goods or the consumer good industry is basically categorized by discretionary spending. When you have a situation where your consumer, your income is under pressure, the best way you have to react is to reassess your budget or to reassess your spending. And the consumer goods industry is one that feels the effect of this. So in terms of price sensitivity, you have a situation where consumers will be looking for cheaper brands or even brands that are now offering sachet kind of products. Within the past year or so, we've seen most of these big name brands rebranding their products into smaller sizes just to maintain market share. That's because inflation is rising. As the last available report we have on unemployment shows unemployment rates over 30%. So consumers are under severe pressure in terms of income. And the consumer goods industry is the consumer goods industry is the sector where they will look to readjust price to readjust their spending needs in order to have a little bit of good welfare.
And then also the COVID, or is it the geopolitical disruption going on now, has brought a lot of changes to the supply chain. So would you say that the supply chain in Nigeria has adapted to new realities?
Yeah, so we have to adapt to the new reality. Like I said earlier, you have an industry like the sugar industry that imports 80% of their raw materials. So you have to adjust to these new realities. But we know that major players in the industry have been investing significant amounts in backward integration programs in order to elevate some of these cost pressures. But this is more of a long-term strategy. And within the short term, you have to adjust to, you just have to adjust to the current realities. Agricultural commodity prices have been on the increase this year. I mentioned last year that sugar prices rose over 30%. They are still elevated. We know what's happening in terms of wheat, grains, and corn. So by and large, industry players we expect them to readjust to the current realities. And also, I think because of these geopolitical tensions, we believe it would reinforce the need for them to invest more and to drive their backward integration programs. So you can have a situation where you're growing or local farmers are producing a decent amount of these commodities so that you can invest locally, and it saves you part of the headache of sourcing FX to purchase some of these commodities, especially when the FX moves against you. We know that in the secondary market, the exchange rate has moved to close to almost 600 to $1. So by the time you compound that effect on what you used to import before, you're finding that your cost of sales have risen substantially.
Yeah, of course, cost of sales have risen, and not a very friendly one for both the consumers and the manufacturers. Thank you so much for shedding light on that consumer goods sector report, Dr. Omobola Adu, Investment Research Analyst with Afrinvest. Thank you for your time. Enjoy the rest of your day.
Yeah, thank you for having me.
We'll take a break now. When we come back, we'll head to, well, another commodities market, very related. Do stay with us. This is Business Morning on Channels Television. Welcome back to watching Business Morning on Channels Television, where there's calm in the aviation sector, but that might just be for 3 months. So it looks like the threat may still be there. For now, airline operators will buy jet fuel for 480 naira for a liter, which pays, but who pays for the balance? And there's also this conversation about price mechanism, the landing cost, and then what eventually is being sold to the airline operators. Oh, we have Bolanle Agbaje now. She has a lot to discuss today. I hope she's prepared for it. Good to see you, second time this week.
Thank you for having me.
So the aviation sector is calm now, but yes, we don't know how long that calm will last for. And we've heard airline operators talking about the issue about price mechanism, landing costs, you know, and they are not comfortable with the price of jet fuel going for 700 naira. Obviously, operational cost is increased, but they seem not to understand how it works. Exactly.
Yeah. So, you know, the jet fuel industry, or the jet fuel pricing mechanism, is a deregulated market,
yes,
just like the diesel market, yes, as well. So it makes sense that, you know, whatever price that we're getting it abroad is what would be reflective of what we're purchasing it at in the country. So the pricing mechanism is actually something that the market has suggested, in the sense that they complain that some of these airlines would, you know, more or less jump from marketer to marketer looking for the best price to buy the jet fuel. But they have more or less come out to say if they can commit to a certain price mechanism in terms of volume, not even price at the moment. So they've committed to buy this amount of volume or liters of jet fuel from each marketer, and so the marketers will be they'll be incentivized to, you know, import this particular product, because they're importing it at their own cost. In any sense, you know, it's not a subsidized, you know, fuel. So whatever price they get it at, it has to be sold. So I guess, you know, this temporary measure by NNPC to supply at 480 is not sustainable. They've actually come out to say this, although the CBN has also mentioned that they're not definitely giving a concessionary rate. They'll give licenses for the airlines to import this jet fuel, but there's no, you know, concessionary rate when it comes to FX. So I think the cost will definitely increase for airlines in the near term.
Yeah, well, we'll come to that part about, you know, airline operators importing the fuel by themselves, yes, because that's a business on its own.
It is,
so
yes,
you wonder how airline operators, do they have the chain, do they have the system to accommodate
I don't think they do, but it's something they would more or less, you know, look into, yes, in terms of looking.
I know we spoke to Moman about that, but before we come to that, this 480 naira, I'm thinking, who is paying for the balance? Or is it that this is what is actually supposed to be?
No, it's not actually what it's supposed to be. So the government has actually come out to say it's going to be a subsidized rate. That's the only solution they can give in the short term. It's another subsidy. Subsidy from about 2006 till date comes to at about 15.6 trillion naira. Is huge. And this would definitely just add to it and, would more or less get consequences like, the JP Morgan delisting Nigeria because of issues, like this. How are we going to fund this subsidy? Is this sustainable? Are we entering a debt trap? Are we more or less going to default on our, existing debt? So, those are some of the issues that I don't think the government has solution for at the moment. Yeah. And, when you're looking at what the government would do in terms of, helping some of these airlines, because, jet fuel contributes about 40 to 50% of their operation costs. And how would that obviously translate to the average consumer that is moving, from state to state within Nigeria? And I think the only solution, more or less looks into the longer term view. In the short term, I think their hands are very much tied. Yeah, there's no money in the system. It will just result in them borrowing more, and you just have a chain of borrowing to fund, short term.
Or borrowing to service the debt.
Yes, it's not great.
It's not great. And that's one of the things that JP Morgan talked about, that the NNPC Limited was not able to remit any revenue to the government, and now we have an additional subsidy.
Yes, investors are watching when it comes to that, and we've not been able to take any advantage of, the high oil environment.
We saw Saudi Aramco now is the most valued, overtaking Apple.
Yes, and that's ideally, that's where Nigeria should be positioned, but we're really still paying for our past mistakes, and hopefully,
it doesn't look like we're correcting those mistakes now, so we might still pay for it in the future.
I think we are, in terms of Dangote's refinery. I don't know how cheap, this fuel that will be coming from Dangote would be. I don't think, because he's invested so much.
Exactly.
And he has to, make
like
those.
You say, it's not Father Christmas.
Exactly. But, it's still a step, and I'm sure. Well, now everything is really it's starting to be clouded by politics at the moment, but
it'll be clouded until maybe mid next year or something.
It would be, and it's hard to tell what direction, the country would be going to. The new administration that would probably come in, what kind of policies would they be adopting?
I mean, that new administration, I think they have a load of work to do.
They do.
A load of work to do.
They do, especially, the recovery from whatever that we've, faced within this year.
And some people are talking about debt cancellation. I'm like, we got that debt cancellation before. What did we do with it?
It will be hard for, the talk of debt cancellation, because, some of these countries that we've borrowed from are also struggling. And it's
especially with the war.
With the war and, all the adverse effects that the war has brought on. So I don't think it's something we're possibly going to get. But if we do get, debt cancellation, it'll be great, because at least we have a clean slate to start out from.
To pile up.
Yes, but if we don't change our ways in terms of how we manage our funds and what we invest in, because the longer term, the supply side policies, the investing in those kinds of policies, education, infrastructure, capital expenditure, those are some of the investments that would actually reap longer-term benefits for the country. But it seems like, most of the debt is actually used to fund recurrent expenditure, like this subsidy.
And we still have a lot of conversations around illegal civil service or, over-bloated civil service with a higher percentage of them being fake.
Exactly.
We don't have people there who are doing the job, they're just getting paid
for it.
Yes. We still have a lot of conversations about how much are the lawmakers being paid, how much is being used for expenditure or services by the executive.
It's the talk under corruption that, is still work in progress. Although the Buhari administration had done quite a bit to curb it to a large extent, but it's still work in progress for the country. And, so all those leakages are things that, we're still trying to fix within the country.
Yeah, and what the mention of Dangote, I mean, we all applaud and wait with bated breath, for when Dangote refinery.
Yes, he's been doing, huge for the country, but he can't do it alone. You obviously have to have, other private individuals and the government working side by side. most of these other businesses are actually struggling. You know, you have like the telcos. We have that in our report as well. They've come out to say the multiple tax environment is actually hindering, you know, business for them.
I mean, the multiple tax environment didn't just start. I think it's higher operational costs like this.
Yes, so the taxes contribute to the higher operational costs that they're facing, and they've more or less mentioned the fact that, you know, even if the government should reduce the taxes that they pay, it's still a position where they feel like, you know, the tariff review is imminent. It's something that they would still have to do because the environment that they're currently operating in is quite high.
Yeah. So we have the consumer being hit on one side by electricity tariff hike, which NERC has said it was the one that was in December. They just published it. Yes. Then you have the telcos.
Yes.
Then you have the jet fuel.
Yes.
So where does the consumer get the extra liquidity to?
At the moment, it's unfortunate for the consumer. Consumer welfare hasn't increased significantly in the past. Like I mentioned, you know, the subsidy increased to about 15.6 trillion naira from 2006 till date. If you look at consumer welfare within those number of years, we haven't seen any significant, you know, increase, and it's a sad position for us. But I hope that, you know, at the end of, by the time, you know, all these external factors that are affecting the country, you know, more or less resolves itself, we should position.
Will they resolve themselves?
I'm hoping, you know, the war in Russia tries to, you know, at least stops at some point, and, you know, we can move on with going to normal.
Yeah, but
business.
even if the war in Russia, I mean, the war in Ukraine ends today,
yes,
I mean, there's a backlog and the time for recovery. I mean, we're still dealing with the consequences of COVID.
Yes,
you know, where we had lockdown in 2020, this 2022. So, I mean, the after effect or the consequences is going to take a while.
Yeah, so short to medium term, not really good for us, but hopefully the longer term should be smiling. We should position ourselves better for the longer term.
A lot of residents in Abuja are not smiling.
Yes,
those queues started since Monday or over the weekend, I think.
Yes, and today's Thursday, and we're still, you know, facing queues in Abuja. Although the NNPC has mentioned that, you know, it's because of the coming back from the holidays, we've seen a lot of, you know, the increased demand within the fall space, and also they've more or less mentioned that, you know, some of these consumers shouldn't engage in panic buying, and they claim that what's going on is panic buying. But I think in the next few days we'll actually tend to see what, you know, why these queues are coming up. I do believe that it's more or less the marketers facing, you know, I think the subsidy is not doing a great job at covering the cost of that. These marketers
I think
are facing.
I read in some places where they said that perhaps the marketers are not able to pay as much. The subsidy is not getting to them,
yes,
you know, as much. So it's more difficult with the, I mean, oil is 105, 106.
Yes, and even the airline operators also mentioned, we don't know how true that is, but they did mention the fact that, you know, earlier this year, they had, NNPC was supposed to supply, you know, jet fuel to them, but this wasn't the case, and you have a lot of hoarding and a lot of corruption going on within the system.
You also have Moman in that space,
yes,
you know, major marketers.
Yes, yes. So the major marketers are the ones that actually mentioned the fact that, you know, you've seen these airline operators moving from marketer to marketer looking for the best price. At the end of the day, it's a deregulated market. But if they do commit to a volume, it makes it easier for them to actually import this jet fuel and supply the airline operators.
Okay, so I'm moving a little, not so far away from that. We saw U.S. inflation decline.
Yes, yes.
Has it gotten to its peak?
We're not sure yet. It seems to have. We hope that, you know, this is a trajectory that is changing. We do know that, you know, the Fed hike is actually, you know, more or less affecting the inflation rate, which is great. And it's also great for us because, you know, on one hand, we have our debt. On the other hand, we have, you know, we're trying to get investors to come into the market. So in any case, if you see inflation rates in the U.S. declining, it's hoped that, you know, the U.S. Fed, the aggressive stance of the U.S. Fed would hopefully change in the near term.
And we don't see ours declining, do we?
No, we don't. We project that.
I think we're expecting inflation figures next week.
Yes, on Monday. Our inflation figures, or our projection for inflation figures, is supposed to increase to about 16.2%. And it's clear with what's going on in the environment. In the month of April, we had seen, you know, increase in diesel price, operating cost of, you know, many businesses within the country, and, you know, so that would obviously translate translate into consumer prices. Agricultural prices, imported agricultural prices also would obviously have an impact on our inflation figures as well.
How do you see this shaping the meeting, the MPC meeting?
We do hope that, you know, they would more or less adopt an aggressive stance to curb the inflation. However, the aggressive stance it's not necessarily great for the average Nigerian when it comes to savings.
Tell us
loans,
how it will
borrowing.
affect the average Nigerian. Why?
So once, you know, you've gotten policy rates up, it's in any sense.
That's the interest rate.
That's the interest rate. You know,
it's currently 11.5.
Yes. So it will translate into, you know, the rate of savings in banks, borrowing rates as well would actually increase. The rates that they in many individuals within the country would pay back would actually increase as well. So it's not necessarily great for, you know, many individuals within the country.
Well, isn't that for individuals who have things to do with the bank? Does it concern
No, but
you?
there's the negative multiplier effect. You know, once you've seen interest rates increase in many aspects of the economy, it definitely translates into the final price of goods within the country. And that's not great for the average Nigerian that is purchasing, you know, some of these particular products within the country. Although currently, consumer agricultural prices, domestic agricultural prices have remained more or less flat. We've seen hikes in, you know, the price of tomato, flour, but generally the prices of many of these agricultural products have remained stable. And we do hope that, you know, that's the same trajectory that it follows.
Well, but we do know that once the manufacturers get those interest rates hiked, it
will definitely be passed down, because I think they've absorbed enough costs, and it seems like the right positioning for some of these businesses. Is
there anything anyone can do in Nigeria at this time to hedge? And also, we noticed that the equities market has been booming, while other markets...
I think that it's showing signs that it's more or less a narrow rally, in the sense that, you know, you have the top companies that are really driving that. You have like the MTN, Dangote, you know, some of these Seplat, some of these big, you know, companies are the ones driving that rally. But I think there will be a rebalancing very soon.
You think the election will?
I think the election would. No, not even the election. Just because, you know, the kind of environment that we're currently operating in, it doesn't make sense. Actually, when the MPC should increase rates, it will definitely, you know, be felt hardly in the equities market.
It will be felt in the market.
It will.
So I don't think. Do you think the MPC can escape increasing rates?
They've done that, you know, in the past, and
but it's been a while.
It's been a while, in the sense that I'm sure they've weighed, you know, the fact that many consumers within the businesses, consumers are struggling, and they would more or less weigh their options. But with this new GDP figures, it seems it's another downer, in the sense that they might look at it and think, you know, why would they, you know, increase rates? It kind of justifies their positioning for holding rates the way it is.
We'll see. It's under 24.
However, it's a lagging indicator, in the sense that it's GDP.
We don't even have the first quarter of 2022.
We don't have, yet. And in the first quarter, we know the war started, I think,
February 24th.
Yes, exactly. So the first quarter would have been hit hard, and I'm sure they will take that into consideration.
All right. So is there any hedge for individuals? Anywhere to run to for shelter?
I think the only place that still remains a safe haven would be the real estate market. Although it's not short-term in any sense, it's a longer-term view. And, you know, population keeps increasing. Demand for housing will definitely keep increasing. So I think the real estate market looks like a good one.
You know, it's good you brought that up, because the real estate has become like a hedge for even money laundering.
Yes.
You know, it's been in the conversation. Even a lot of Russians who are trying to, you know, protect their wealth.
It's real estate.
At this time, Dubai has been having a boost.
Yes, real estate is always, you know, the go-to when it comes to protecting and hedging yourself against the short-term vulnerabilities that were seeing in the market.
Great idea. Great idea. So what else is happening in the commodity space?
Yes, so in the commodity space, we're still seeing global commodities. Prices are still very high, although they're still, we're in the green at the moment. I think just the exception of corn, but corn is facing challenges with production and supply. But I think wheat actually came down as at today, which is great, but it's still above $1,000, and it's not so good for us works in any sense. But I think some of these more or less wheat users are looking for substitutes. They're still in the process.
Yeah, we talked about those substitutes.
Yes. So that's what's happening in the market. Cocoa is doing great as well. It's another avenue for us to increase our external reserves.
All right, thank you so much. Very rich conversation there with Bolanle Agbaje, analyst of Financial Derivatives Company. Thank you so much for your time.
Thank you for having me.
We'll take a break now. When we come back, we'll head to London. Do stay with us. This is Business Morning on Channels Television. You're welcome back. Well, let's head to London now. UK economy shrank by 0.1% in March as cost of living crisis bites, and then it looks like consumers just keep cutting spending. We have Juliana now joining us from our London studio to give us details. Hello, Juliana. Good morning.
Good morning, Innie.
So those GDP figures, they're not looking good from anywhere.
They're not looking good. I think it's going to be an uncomfortable couple of days for Chancellor Rishi Sunak and the Prime Minister, because this data that was released by the Office for National Statistics really just doubles down on what opposition benches and charities have been speaking about, which is the cost of living crisis, and it is starting to affect the economy because it is much more difficult for people to fill up their cars and to pay for goods at the checkout, so they are holding back. In March, GDP fell by 0.1%, and it really does appear as if we could be heading into this recession that was first spoken about by the Bank of England last week. And now March is a really interesting month. We know that, of course, in February we had the invasion of Ukraine by Russia. A lot of this data is reflected by that because, of course, there was that spike in a barrel of Brent crude, which was trading at some points above $100 a barrel. This affected fuel. Lots of people deciding not to fill up their cars as much as they would do. But then in April, things got a lot worse. So with this data from the Office for National Statistics, we're always looking in the rearview mirror. We're not having a forensic look at what's happening at the moment. And according to all economists, things are only going to get worse, which does mean that people are going to hold back more and more. And in April, we had the rise in national insurance tax. We had the rise in energy bills. So no, it isn't looking good. Obviously, a technical recession is when you have 2 quarters of a contraction. And now we didn't expect to get into a technical recession by the end of the year. But as things are slowly going to get tighter and tighter for consumers, that could come much earlier. So let's just wait and see. We are potentially expecting a change of policy and a U-turn from the Chancellor, who may be able to pump some money into households so they will be able to spend. Because, of course, if people are not spending because they can't afford it, the economy can't grow.
Yeah, it can grow. We do hope for a miracle. I don't know where that would come from. But as with everything else, monthly broadband bill also increased. I mean, that shouldn't come as a surprise. It went up as much as 9.3% last month, while there's some customers paid as high as 11.7%. Well, even contract prices are responding to economic parameters, right?
Yeah, they are. This is the 9.3% is a figure from Vodafone. So if you are in the UK and you're a Vodafone subscriber or user, then yes, you would have noticed that your bills have gone higher. But, this is across the board, really. I think even Netflix and a lot of those other streaming giants like Disney Plus and Prime Video, they're all putting their prices up, some by £1, some by £1.50. And it does add up, especially if you've got multiple contracts, monthly contracts, you like to watch different content across different platforms. It is adding up, and it's not just adding up on the streaming giants, as you said, it's also adding up on telecoms, Vodafone, Sky Broadband. It is just getting really, really tough. And a lot of these companies, as you would expect in a capitalist society, are profiting on that. Of course, if you're hearing from the government and from economists that things are getting tight and everything is going up, it's a time for you to do the same thing. So it's really unfortunate. But the most important thing is that the government, the British government, does its bit and dips into the coffers to help those families, those 1.5 million people that could potentially live in destitute, and give them the support they need, because of course it's not their money, it's those who are paying tax is money. And I think it's widely believed from those who are paying tax in the UK that people who need the help should be getting it.
Yeah, well, because it's more like saving for the rainy days, and these are the rainy days, so I guess it's time to dip hands into those coffers. Well, thank you so much, Juliana. We'll talk to you again at 1:30.
Thanks, Ine.
Let's head to the markets now. We have Will Ebong. Well, yesterday, I had the last laugh. Today, Will has a bigger laugh. Oh, yeah. That's what I see on your face, Will.
Good morning, Nini. Yes, bullish sentiments returned to the equities market was a big rebound for the equities. The NGX investors are smiling. Demand for MTN, the one that brought down the market, the day before, is actually one pulling, bringing the bucket back up. It was up 9.21% yesterday, and it drove the benchmark index higher by almost 2%. Now, we hit a milestone yesterday. We crossed the 52,000 points and nearing the 53,000 level at the moment. Month-to-date and year-to-date returns moderated. Month-to-date is at 6.5% now, and year-to-date is 23.7%. Can you beat that? It is totally mind-blowing. The total volume of trades actually increased yesterday. We saw a sea of green on the activity chart by 25.9% to 417.39 million units traded yesterday. Value was at 7.33 billion naira and exchanging over 7,200 deals. Now we saw Jay's Bank topping the trades yesterday. Investors are really interested in that stock. 40.44 million units of its shares were traded, and MTN was the most traded stock by value. It was up 1.29 million naira yesterday. Sectoral performance was also positive. Green chart there, but we have Afolabi Gbenro, trader at Stanbic IBT Stockbrokers, to tell us more about what's happening and what's really driving this market. Good morning, Afolabi.
Good morning, Will. Thank you for having me.
Also, Afolabi, the gains in the market are really high, I believe, more than the optimism we've even, suggested or even, imagined. We were kind of wondering what's really driving the market, because it's hit another milestone, crossing the 51,000 level. I mean, the 52,000 level. Now we're in the 52, it's nearing the 53,000 points. And also the market cap has also crossed the 28 trillion naira mark. What is really driving the optimism here? What are we looking at? Is it a stock market bubble? What's happening?
Thank you for the question, Will. There's a lot of excitement in the markets because of the performance over the past couple of days. We're seeing this performance come off on the back of the recently released quarterly earnings, where companies are basically performing much better than investors had anticipated. And this is what has been fueling performance, especially in the consumer names, so the likes of Nigerian breweries, Guinness, international breweries, Okomo, Unilever, Cadbury. We've been seeing significant price gains across those names, mostly on the back of fantastic results released by the company. In MTN, we're seeing that it's mostly local action that has been driving the performance there. It's practically been on full bid the last few trading sessions, and it seems as if there's still a little bit of demand in the stock, and we expect to see that continue today, tomorrow.
Okay, speaking of the telecom sector, we're moving to Airtel Africa. Posted very impressive Q1 results. I believe it's maybe for the full year 2022. Can you break down briefly how this impacts investors' bottom line? Because the gross revenue was up about 20.41%.
Yeah, so the gross revenue, and you're right, it's for the full year 2022 results. The gross revenue was up about 21.3% to $4.7 billion. Profit before tax was up 75%. Profit after tax was up about 82%. The performance was strong. The earnings per share grew about 86%. We also saw strong performance on the back of data and mobile money. So mobile money grew about 22%, and then the mobile money revenue grew about 34.9%. So very decent set of numbers from Airtel that was released yesterday to the market.
So we're seeing the current share price at 1,400 naira. Do you see it remaining at that level, or is it going to go higher? Is it going to be like one of those premium stocks that one has to really save up to buy? What's happening in the future?
So funny enough, currently in the market, the bid in the market is at 1,540, which is way above the the previous closing price of 1,400. It's just that we need liquidity to drive the change in the price. So we need about 100,000 units to trade at a single block for the price to change. But there's definitely interest in the stock. There's demand in the stock. So we'll just watch it and see how it goes.
Thank you so much, Afolabi, for those insights and sharing your perspective on the program. Good to have you always. Afolabi, trader at Stanbic IBTC Stockbrokers. So, the bond market yesterday continued to follow the trend. Quiet trading day. Interest in short-term securities, especially for the 2025 and 2026 papers, was witnessed yesterday, while there were still sell-offs on the long end of the curve. Average yield dropped by 1 basis point from 11.26 to about 11.25%. Treasury bills generally was also as well quiet. There was an auction yesterday, and investors are probably waiting to see how the results of yesterday, to see how they can continue to trade today. Now, a total of 125.56 billion was on offer as traders, bidded for that auction, and the results will be out. We'll discuss that tomorrow. Now, we'll also notice the activities on the August 2022 paper. That's the one that traded at 500 million, caused, an uptick in yields. Probably demand was low for that, and so we saw a boost in the yields by about 20 basis points. Rates generally remained unchanged at that segment. So outlook system liquidity, we expect that to persist throughout the course of the week. That's what investors are saying, and inflows from maturities have reduced, and the bearish trend, that's the uptick in yields, is expected to persist in that fixed income market. Yeah, well, thank you so much, Will. And it'll also be interesting to know from your analysts what's the impact that JP Morgan delisting Nigeria, because eventually that's going to affect interest rates. It's also going to affect the risk appetite of Nigerian bonds. So it would be interesting to know what your analysts would say about that. But you have time, I guess. You have tomorrow. There's capital markets to discuss all of that. But we really like to know that. Thank you so much for that updates from the market. And that's where we draw the curtains on the program today. Thursday, we have the final word tomorrow. We will say thank God it's Friday tomorrow, and then we'll have another set of interesting conversations all lined up for you. But at 1:30, Business Incorporated will be here. We'll give you updates from the world of business. I'm Ini John Mekwa. Bye.